afternoon, everyone. Anthony Locke with Torrey Hills Capital, and welcome to the Vizsla Silver webcast for February 27th, 2025. Hope everyone's doing well. Thanks for taking the time today to join our virtual lunch. We're very excited to give everyone an update on Vizsla Silver. Obviously, so many positive developments have happened for the company with more upcoming milestones on tap for the remainder of 2025 and beyond. The company's Panuco project, to steal a line from Mike in their deck, is emerging as a tier one asset, and we feel that it's well on its way to becoming the world's largest single asset silver primary producer through its Panuco project in Mexico. Company trades on the NYSE American and the TSX under the ticker VZLA, currently trading with a market cap of only about $550 million US. It is a little bit of a pullback, which we think presents a fantastic buying opportunity, but very solid balance sheet, growing mineral reserve, and reasonable time frame until production. We feel there's plenty of potential upside in the stock, especially at these levels. With us today to discuss Vizsla Silver's operations and growth strategy going forward is the company's Senior VP of Business Development and Strategy, Mike Pettingel. Mike, as usual, it's great to have you on. Really looking forward to have you update the group on everything that is going on with Vizsla. Before we get started and I turn it over to Mike, everybody knows the format. If you have a question, type it into the Q&A or chat box and we will make sure it gets answered. So with that said, I'm going to turn it over to Mike. Mike, the floor is yours.
Excellent. Thanks, Anthony, and thanks everyone for taking the time out of your busy schedules to join us today and hear an update on Vizsla Silver and, of course, everything we're doing at the Panuco project. As Anthony mentioned, we are dual listed on both the NYSE American and the Toronto Stock Exchange. We graduated to the big board last December, so we're very pleased about that. We're doing about 2.7 million shares daily between the two exchanges, but certainly the lion's share is owing to the NYSE American. Just get my control. So we will be making some forward-looking statements today, and I'll also mention, if you do have any questions, I really do prefer the dialogue. I'll do a page turner, of course, in the presentation, but if you do have a question at any time, please feel free to type it into the box, and Anthony can just interrupt me. So we always put this right off the bat, and Anthony alluded to this as well. This is our vision here, and our vision is really to get to first silver in 2027. Quite often you do have these exploration companies that are very good at exploring. They stick to that lane and they prove up a mineral asset, a mineralized body, and then they sell that to a producer who's very good at producing. They have that competitive advantage. They've got the team and the know-how to push that forward into development, of course, construction, and then ultimately produce from that asset. We have really the fortune here of having the asset that's got a low capital hurdle, near surface mineralization in a previously disturbed region, with an excellent team, both on the exploration side as well as that production construction side. So really, we've got that deep bench strength that we can push this project forward ourselves. And again, with that low capital hurdle, we're in a very good position to take this construction into production. So it's our vision to become the world's largest single asset silver primary producer through the organic exploration and development of our flagship Panuco district down in Mexico. And the team that's going to do this, arguably your most important asset above the mineralized body, is what you see here. Mike Connert and Craig Perry, our CEO and chairman, they're business partners. They teamed up back in 2018. They transacted on a cobalt deal. Now, this was a small deal, but it was tremendous for those that were involved. It was a short-lived deal as well, about 7 months from initial investment to that transaction. That really got Mike and Craig's business relationship going. The very next day, they formed two companies, one being Vizsla Silver and the second one being Inventa Capital. Inventa Capital is the private parent umbrella to Silver. There's about 7 companies now under that umbrella. And of course, Vizsla Silver being the flagship, and they're focused on the commodities the world needs for the electrification push. Silver, of course, again, being flagship. Mike is an entrepreneur, right? Mike comes from this entrepreneurial background. He's raised over 800 million since that initial transaction that I mentioned for the cobalt deal. And frankly, he's cut his teeth in the mining space at a few corporates, Riverside Resources, but most notably was Pretium's Bruce Jack project. He did this in a corp dev IR capacity. Craig Perry, many of you will recognize him really from that uranium space, but former CEO and founder of Next Gen Energy, founder of ISO Energy. These are $2 billion uranium plays. He's still on the board of Skeena Gold and Silver. It says Skeena Resources here. They've since changed their name. And of course, chairman of Vizsla here. He's also the CEO of one of our early spinouts, Vizsla Copper, which many of you will know. The ticker is VCU on that one. We've got Simon Smirlik here as COO. Now, Simon's been with the company since inception as its first independent director. He's also been the chair of our technical committees. So anything resource related, of course, the PEA that we published last summer, metallurgical programs, those all go through our technical committee, which again, Simon has been the chair of. But he joined our management team last March. He stepped down from his role of chief operating officer of Ausenco Engineering, where he's basically built mines all over the world for the last 15 years. And frankly, he's built 42 mines in his 30+ year career. Really, a consummate mine builder is what we have in Simon. So Simon's really tasked with leading this next chapter for the Panuco project. We made our initial discoveries that Jesus was helpful for, and really, you're talking 2020 to now being an exploration company. But once we published that PEA, we really tipped the scales, and now we're an early stage developer, again, hunting cash flow, targeting for the back end of 2027. Notably, I should say Simon was involved in the construction development of Silvercrest Las Chispas mine. That's a really good analog. You'll hear me reference this quite a bit throughout this presentation. And of course, they were just recently acquired by Core Mining for an attractive premium. We'll talk about that later on as well. Dr. Velador here, he's a PhD in epithermal systems, the exact same type of mineralized system we have at Panuco. And Jesus, he's a Mexican national. He's been involved in many, many major discoveries in Mexico. And you can see there by his CV, he's worked for most of the major companies in Mexico at those major projects. First Majestic, Fortuna, Alamos, just to name a few. He's really been notably involved with the discovery of the Valdecañas vein at Juanicipio. That's Mag Silver's project. He supported it from, of course, the other side, so the Pettingel side, whereas Dr. Peter McGaw was, of course, on the Mag side. We've now got Dr. McGaw and Dr. Velador working together again. We formed a joint technical committee to go and explore the rest of our district, which again, Dr. McGaw is an advisor to our group. Lastly, on this page is Eduardo Luna, excuse me. Eduardo joined our group officially, would have been October of 2023, but he is really the Mexican senior statesman on our board of directors. He's a Mexican Mining Hall of Fame member. He's a director of Core Mining, former president of the Mexican Mining Chamber and the Silver Institute. But really, when you start looking at all of the companies that he's been involved with in the past, he stepped down from the board of Wheaton Precious Metals, a $30 billion streaming company, to join our board. Now, this was part of their succession planning. He had been on that board for about 15 years. But every asset, or excuse me, every company that he's been involved with here has really got one single asset in common, and that's San Dimas. And San Dimas is still First Majestic's flagship project. It's located about 60 kilometers up the road from our project, and it's been in production for about 150 years. Over that time period, it's produced over 1 billion ounces of silver equivalent. So that's the size of the prize that we're after here at Panuco, given our project has had 0 years of commercial production. You're talking same geology, same timing of mineralization, same host rocks. It's just a difference in commercial production up there and no commercial production where we are. So jumping right into the project, I think this is important because we published this pretty recently. This is January 6th. We announced our 4th resource update. And again, for context, to bring everybody in, maybe I've got my little my little pointer I can use. I don't know how to get, oh, here it is. This one works. Everybody can see this now. We made our initial discovery at the Napoleon structure. And it's important to note that this district, it really just suffered from fragmented land ownership. So no one company could ever come in here and really start to explore on a systematic basis because it was never consolidated until Vizsla Silver came down in 2020. And now we can use these historic workings that exist because the discovery dates back similar to San Dimas almost 450, 500 years ago to the conquistadors, right? So there's been intermittent, very small scale, call it artisanal mining that's occurred. And this is really a vectoring tool for us. So we made that initial discovery going downtrend from a historic working at Napoleon. You flash forward about 18 months from that initial discovery, we published our maiden resource, and this would have been in March of 2022, about 100 million ounces of silver equivalent. We then discovered the Copala structure here, which really does form the backbone of our project today, including the economic study we published in July of last year. And so 9 months from that initial discovery, we discovered Copala, or excuse me, 9 months from that maiden resource, we had discovered Copala and announced a 100 million ounce increase to that resource. So now we were sitting at 220 million ounces. You flash forward another 12 months, we added another 100 million ounces. Right, so there's quite a pattern that's forming here. There's 12 structures that make up this resource. They're open in every single direction. So we've not closed off any mineralization, but we made that decision to focus on cash flow, right? We've ring fenced enough as of the third resource. So this last year, the focus was really on incremental conversion to those higher confidence categories so that we could get prepared to delineate our maiden reserve, right? And just to bring everybody up to speed there, when you have a resource, it's very low confidence. You can't announce a reserve until you have, measured or indicated material, so your high confidence categories, as well as economics. And that's what will come out in the feasibility study that we're hoping to publish in the back of this year. So right now, we do not have reserves. This is just a resource base. And red is your lowest confidence, so 100-meter spacings between holes. The gray that you see on this map is your indicated, so that's higher confidence. You've got 50-meter spacings. And then once you delineate measured, which is your black, that's your highest confidence category, right? That's 25-meter centers between holes. Heading into this resource update, we did not have any measured classification delineated. It was all inferred and indicated. So the PEA mine plan was only based on indicated mineralization. Well, we targeted 20 million ounces of measured in and around the stope shapes that were outlined in the PEA to be years 1 through 3. So really trying to de-risk those initial years that really drive your economics for the project. And so what we did is we actually came out with 46 million ounces in measured. We realized a 43% increase in that measured and indicated classification. Now recall, that's incredibly important because as you go to feasibility study, you can no longer include inferred mineralization in your mine plan. Hence why we were so focused on reducing the drill spacing and proving up that higher confidence category. Not only did we increase the category through reducing the drill spacings, but we realized almost a 5% increase in the grade profile. So what this means is as we reduce the drill spacing in between high grade intercepts, we hit even higher grade intercepts, bringing that whole grade profile for those ounces up. So same tons, higher grade translates into more ounces. So this is exactly what you want to see as you drill tighter spacings and improve that continuity of that mineralization. So this is really important as we set the stage for the updated mine plan to come out in the feasibility in the back end of this year. So the investment thesis for Vizsla Silver here is really threefold. We're rapidly advancing towards development. We have tremendous amounts of exploration upside remaining in our district, and we're doing this responsibly, and that's really, really important. So on the development front, we do have a fast track to production. We've published our PEA. We've submitted initial permits. We've got social license to operate in the region. Frankly, now we are going through the feasibility study with a construction decision to be made in the back end of this year or early next year once we receive those permits. And again, all targeting first silver in the back end of 2027. We are well funded to do this today and take care of all of the operational objectives you're going to hear me speak on. We've got about 92 million US currently in the bank, and no debt. And we are focused on de-risking, right? I'm going to touch on exploration here, but make no mistake, corporately, we are laser focused on getting to cash flow. We can then start exploring the rest of this district, with a good exploration budget that's non-dilutive, right? I think that's really important for shareholders and stakeholders alike. But we do have a lot of exploration ground, and not only on our contiguous package that I'll highlight here shortly, but on our satellite districts that we've acquired last year. In fact, we tripled our land package effectively last year when the silver market and of course the Mexican mining silver market was at a very low sentiment. So for about $8 million in cash and shares spread over a 3-year period, we were able to really grow our land holdings in country. And the upside on the district itself, though, you can see here about 67% of the property has been mapped. So we're still mapping and uncovering historic workings, which of course can lead to new discoveries, similar to what we did at Napoleon. But again, low unit cost methodologies is what we're employing this year. Obviously, drilling is your highest expense, so we've really reduced where those drill meters are going, even though we are actively drilling with 2 rigs currently, and I'll touch on that as well. On the responsible growth side, I really like to highlight the ejidos. Some folks don't know what ejidos are, particularly in the US. Ejidos in Mexico are local land owning communities. So essentially, mining companies such as Vizsla Silver, we hold the concessions and we own the subsurface mineral rights. But the surface rights are held by these local groups called ejidos. So when you talk about being able to access the project and push it forward, you need that community buy-in. And this does wonders in the eyes of the government when you're looking to actually permit the project as well. So we've been able to secure 30-year operating agreements. These are not short-term exploration agreements. These are operating agreements with all 5 of our local ejido. And that's important, to do it at this stage. You're getting paid the same if you're over here. In Canada, we call it moose pasture, where you haven't walked the ground. There's no mapping. There could be mineralization, but it's not realized today. You get paid the same as the group that has, Copala right on your ground. And that's really important to maintain that social license. So the project itself, you can see here, we're located in Western Mexico, about an hour drive from the coastal city of Mazatlan. Mazatlan's got about 1 million individuals in it. It's a location where the Mexican middle class go for vacation and spring break. And there's international flights coming from Vancouver, LA, Denver, Toronto. In fact, we've got a lot of snowbirds that historically come from Canada and pop down to Mazatlan to holiday. There's also deep sea port here that we've got lots of cruise ships that come in here, but this could really benefit if you're shipping concentrate. Also rail that runs the coast. Now we are not focused on shipping concentrate. We're going to produce doré, but I'll get into that in just a moment. You can also see that you've got 2 highways that come right up. So it's about, again, an hour drive or less to go from the beach all the way to the project site. This highway actually adds an added layer of security for us, given that this is a major thoroughfare that connects the central part of the country to the coast. So, the government maintains this roadway. But arguably the most important element on this map are these green lines. And this might be difficult for some on your slide, but on this page, you can see it a lot clearer. These represent high tension power lines, right? And if you go back and look at a few of the other notable single asset, silver primary, single jurisdiction silver companies, Mag Silver, Silvercrest, power was one of the biggest impediments for them reaching not only commercial, but initial production. Now we're going through the studies now and submitting the permits for power, but this puts us in a really good way in terms of access to that power, right? So the access to infrastructure in this region is bar none. frankly. And when you couple this with the brownfields nature of this district, right? I mentioned the discoveries date back to the conquistadors, and they've been intermittently mining this on a small scale. And then when I say small scale, you're talking optical mining, so following the shiny stuff. You might go 30, 40 meters below the hill till you hit the water table. You didn't have the pumping technology at the time to go below that. So then you just follow it maybe 100 meters into the hill. If you lose the shiny stuff, well, you walk away and find the next one. So we have brown fields or previously disturbed ground all over this district. Another point that can really support expediting this permitting process, because of course governments really like when you come in and leave the area far superior to the way you came in to find it.
Hey, Mike, quick question about Ajitos. Obviously, you've made investments in the community. But the question is, will the Ajitos have a royalty or ongoing payment once in production?
Absolutely. Yeah, they get paid every year. It's roughly $2 million a year Canadian that we pay all the Ajitos. That those payments would increase upon actual production. But again, you're not talking anything that's going to break the bank here, especially when we highlight these economics. Frankly, I'm a fan of paying the Ajitos as much as possible,
Hmm.
right? This is their home and it's their office. We're just coming in, right? And so it's the communities and our stakeholders, and frankly, our communities do hold shares, because when we took out the earn-in agreements to buy this district, we had quite frankly a large balloon payment of about 46 million US that we were going to give them in cash. Well, we were able to negotiate half cash, half shares. I know where all of those shares are. They haven't sold a single one, so they are, stakeholders and shareholders, which is excellent.
That's great. Thank you.
So the economics that you're seeing here, we published this July of last year, so still quite fresh in terms of comparables here. What you're seeing is an NPV after tax five of 1.1 billion US. You've got an 86% after tax IRR and an incredibly rapid payback period of just 9 months. The capital outlay here, and I'll highlight this in more slides, is $224 million US. That's what allows us to have this incredible over 5 times NPV to CapEx ratio. The base case silver and gold commodity price assumptions that were used at the time of the study were $26 silver, 75 gold. These were CIBC's long-term price assumptions at the time, and frankly, the market thought they were too high. Where we sit now, it's probably somewhere in between here, 32 silver, 28, $2,900 gold. In that range, based on the PEA study, you're into triple digit IRR territory, and call it $1.6 billion NPV 5 after tax. This project really does hum in the first few years, and again, where you're doing on average 250 million in post-tax free cash flow. That's how you pay back this project so rapidly. And we highlight this slide because we can. Frankly, there's not a lot of infrastructure projects, mining companies that can really talk to an NPV to CapEx ratio over 5 times. Silvercrest, yet again, a real outstanding corporate, and particularly Las Chispas asset in Mexico. It was 4 times, albeit at a lower NPV, and it's just a smaller project, right? You're talking about a project that had a 7-year mine life with really no upside potential. We've highlighted an 11-year mine life here, which just covers 8% of the known veins we have. And yet again, all the veins that went into this resource in this mine plan, they're open in every direction except for up, because we're already at surface. So when we talk about this 11-year mine plan, or even this production profile that I'll highlight here shortly, this is just a snapshot in time. And frankly, we knew this was stale the day we published the PEA, right? And so when we look at the resource base that it's informed on, as I mentioned, it's only based on 156 million ounces of indicated material. In total, you're looking at 162 million ounces, so a small bit of inferred. Well, we've grown that resource now, the M&I resource, by 43%. right? So this will translate into the updated mine plan, and I'll do my best to explain what we think could happen based on this new resource shortly. So the mine itself, though, conventional mining, conventional processing. We're not trying to reinvent the wheel here. This is all going to be done underground. So bulk tonnage, long hole stoping is our preferred mining method, with a very small component of selective drift and fill. This is a large processing facility, initially starting at 3,300 tons per day. So that's about 1,000,000 tons per year, ramping up to 4,000 tons in year 4 as we develop into the Napoleon side of things. It's easy to think about this in two mines. The first underground mine starts here at Copala. This is portal access, so it won't be a big shaft. Again, we're right at surface, so we're going to use the topography to our benefit here. This keeps the capital costs and the operating costs very, very low. The second mine, as mentioned, though, in year 4 is over at Napoleon, and you do have a slightly finer grain to the mineralization, hence why we ramp things up and we bring in a flotation circuit. I'm not going to get too technical on this call and somebody asks those questions, but I am a geologist and an engineer, so I'm happy to really get into it if anybody wants to. As I mentioned, we're not doing concentrates. This is whole ore leach to produce a doré. So we actually will be producing a gold silver bar here. Now, we do have a bit of base metals. About 8% of the contained metal in the resource as a whole is owing to base metals. However, all of the economics you see today and in the feasibility study are only focused on the gold and the silver. The base metals, it really doesn't matter. It really doesn't add too much in terms of the economics. And so we're going to push those right into the tailings. There could be an economic body here of base metal mineralization at depth. We don't know today because we just haven't chased it down yet. So all of the economics you see, a good way to think about it is a 60-40 split on silver and gold. That's the value. Now, that was at the PEA. With the current price assumptions or at spot, I'd be interested to see what that looks like. It could be closer to 50-50 split, but we do want to highlight more silver because, again, silver primary companies do fetch a premium when it comes to their PNAV valuations. As I mentioned, capital outlay, very, very low here. In fact, it's less than half of our current market cap. I challenge everyone on the call here to find a tier 1 developer with a capital outlay, initial capital outlay that's less than their current market cap at the PEA stage. And again, 11 years as an initial mine life. We could show a 30-year mine life with this project, but the only groups that want to see that are the corporate counterparties who want to take us over. Frankly, if you go beyond, call it 13, 14 years, the present value of those future cash flows get eroded very, very quickly. So, as we move forward into updated mine plans, you might see incremental growth there, but frankly, it's not in anyone's interest to show, that big mine life, although we'll likely be mining here for 100+ years, similar to San Dimas. Very low all-in sustaining costs, around $9.40. Where does this stack up to our peer group? I'll come back to that in a second. Actually, you know what? Yeah, I'll come back to that in a second. Nah, we'll go back here. $9.40, so sub $10 on an all-in sustaining cost basis. This is very low, and I'll tie that into context shortly. When you look at the overall site layout here, you can tell it's all compact, right? This is roughly a 3-kilometer radius for every bit of infrastructure. So keeping this tight footprint, again, keeps the capital outlay low. We have virtually no linear infrastructure to develop here. We're using all the historic roads that exist. And for context there, we've drilled about 400,000 meters in this district. We've not constructed a single road, right? That just, again, owes to the wealth of infrastructure that remains in this district. The TSF location's about 2.5 kilometers as the crow flies. But because of the topography, you can't see it on this map, but it's all gravity fed to get down to the TSF. Yet again, keeping your OpEx low. You're about 1 kilometer from any given ore source to the processing facility. Again, OpEx low, and you're only about 70 meters from surface to get to that mineralization. That keeps your capital outlay very, very low. And again, everywhere that we look to develop this surface infrastructure, we went to great trade-offs. I think you've got 7 trade-offs for the processing facility, 9 trade-offs for the TSF. to really pick an excellent location for each of these, as well as the portals that were optimal. Not only were they optimal, but they're located on those disturbed pieces of ground that I mentioned, right? That's really important when we go to look to receive those permits in a reduced time frame. This is just a schematic to you can see what the underground looks like, and particularly those first few years that we're focused on mining Copala. So the production profile, first few years at Copala Cristiano, you're doing just over 20 million ounces of silver equivalent per year. And again, this is just gold and silver. As you develop into Napoleon side of things, I mentioned, the tapers off for life of mine over 11 years of around 15 million ounces. Now, what we suspect could happen based on this updated resource, you might see a slight improvement to your production profile in the first few years, given that higher grade profile. Maybe you're closer to 22 million ounces per annum. And then as you develop, even before that, maybe we push that out as well into years 3 and 4. So higher grades in the first few years, pushed out a little bit more into years 3 and 4. And then, you're not delaying the development into Napoleon side of things. You would just be stacking that right on top. So I suspect you might see a life of mine number that's a bit closer to what you see here of 20 million ounces over, those 11 years. And what does that look like in terms of the comparables? Whoop. This is how we stack up today if we were in production based on those PEA numbers. We would be a top 5 silver producer with the lowest all-in sustaining costs. You can see here that the all-in sustaining cost average is, I can't see it, is around $17.50, whereas, our PEA numbers are just sub 10. That's a 50% reduction from these numbers. These are 2023 annual production numbers. We've seen a few of the 2024 numbers come in. I'm excited to update this. Hopefully we've got it all updated by April when all of these new production numbers come in from 2024, and we'll be moving towards our FS and having those numbers updated in the back end of this year. But something interesting here, if you look where we sit at 15 million ounces life of mine at $9.40 AISC, those that are in front of us, Fresnillo. This is the biggest silver mining company on the planet. We are the only one in these top 5 that is held by an independent, the only one by a junior, right? So we're in a very, very good way here. And particularly when you look at that M&A premium that could exist, this is just one way to look at it. Now, I should state, and it harkens back to that first slide I showed you on our vision, we are not prioritizing a sale of this asset. In fact, we recognize that it's just too good, and to maximize the value, given we've got the exploration team and the development team with Simon leading the charge here, it's our intent to continue to explore, but also develop, construct, and then produce this asset ourselves.
And my quick question that came in, how certain are you that you will pick up the high grades in initial production?
Yeah, that's great. Well, that's what's really afforded by the PEA. This is a long section, so a cross section would cut perpendicular to a vein. This is cut right along the strike length of Copala. Copala is about a mile long right now, so 1.8 kilometers, 1,800 meters, and it's about 10 meters wide or about 33 feet wide. And what you're looking at here, blue polygon and red polygon, are stope shapes year 1 and 2, respectively. So you can see some of these high grade intervals that were published last year to inform this resource update. So you can't simply lay new or old stope shapes on a new resource block model, or vice versa, right? I can't lay new stope shapes on an old block model. So this has to come out through the detailed engineering, which is ongoing currently. But this is the best I can show as of today to support that question. Well, we've got phenomenal intercepts, 13 meters grading 2.5 kilos that did not inform the PEA study, right? And that's just an example. Not only did we bring mineralization, higher grade mineralization within those stope shapes, but we actually tagged into mineralization outboard of the stopes, even outboard of the resource boundary. So it's very, very rare that not only are you adding ounces through this infill, but actually finding new ounces outboard of your resource with an infill program. Again, highlighting the continuity, the exceptional continuity that we have at Copala. This slide, I just went back a few slides, following that production profile to just highlight, again, the scarcity of assets out there, the scarcity of quality silver, and I don't go into a lot of detail on the silver market as a whole. If there's questions that come in, I'm happy to discuss it. But frankly, most of us know that there's a supply demand deficit that's existing right now, and frankly, we're in the fourth year of this supply demand deficit in the silver space. And so when we look at the supply side of things, there's just not a lot to come online, right? You've got a handful of assets. Now, these are assets that are silver primary, so they need to be producing more than 50% of their product mix in silver, and they need to be scalable. So those projects that will produce over 5 million ounces per year. There's lots of small ones, but that doesn't move the needle in terms of satisfying that deficit. But when we look at those scalable ones that are silver primary, again, only a handful. And when we average them, netting out Vizsla's Panuco, you're about half of what Panuco will produce. So again, this is highlighting, that not only the necessity for Panuco in the silver space, but the precious metal space as a whole. So the key areas for enhancement as we go from PEA into FS. Completed the infill in the overall category conversion here at Copala, in particularly to get ready for that initial production. And again, this goes back to that question, well, how are you certain that you have these high grades in those early years of production? Well, again, that's what the drilling all last year was focused on, really determining and understanding those first few years of production, because that's where you pay the project back, right? So that's been a major focus for us, and that still remains ongoing. We've got this year about 15,000 meters of infill/expansionary drilling going to target the mine plan again in the second half of this year. Optimized metallurgy. We've got 3 rounds of metallurgy that been complete. The 4th round is almost complete. Excellent recoveries, no deleterious elements. But what we're focused on now is really determining, do we need to add that float circuit in year 4 at Napoleon, right? So doing the trade-offs there to understanding if flotation will really be required. Now, we did add it in the PEA because we wanted to permit for it. That way we don't have to go back to the drawing board in the eventuality that we need it, right? Now, this is only about $11 million in expansion capital, right, that you'll pay through cash flow. However, we want to make sure that we're being optimal here. Again, the mine design and scheduling based on this new resource, and just going back to this slide here, the sequencing absolutely could change. The stope shapes can absolutely change. And so that's what's going through now with Ausenco and Mining Plus, our mine design team. And then, of course, there's also further optimizations and other areas that are in the capital outlay, notably the TSF, water management, but also ventilation, right? We went through some options that were the biggest, most expensive option at the time, knowing that we could fine-tune that spear. For those of you that have followed Vizsla for some time, you know that we're a group that prioritizes under-promising and over-delivering, right, on basically everything that we do. And this is an area, again, that we don't want to go backwards, right? Similar to not going backwards in terms of permits, we don't want to go backwards in terms of inflated costs from the PEA to the FS. If anything, we want to reduce those costs and ultimately potentially reduce that payback period. Even though it's only 9 months, we could see a potential reduction to closer to 6 months based on the new work. One of the most important de-risking initiatives that we have ongoing at the moment is our fully permitted, fully funded bulk sample test mine program. And so this is, again, fully permitted at the Copala portal. This portal will be used for main mine access once we receive a positive decision on our MIA application. That's our big environmental permit. But we have started this. The first and second blasts have been in place at the portal here. So the box cuts all in, it's all shotcreted. We've had 2 blasts. I've seen these videos. It's really quite tremendous to see. It'll take about 6 to 8 months to get down and complete this program. As I mentioned, you're 70 meters below surface. You're about a kilometer in total development here. But as you can see, it's only 10,000 tons. We were permitted for 25,000 tons at Napoleon and Copala, but given the mine's going to start at Copala, this is where all those really juicy cash flows are coming from. This is our focus. And if you talk to Simon, we'll likely be mining Copala for 15 years. That's how big this structure is. And given its open-ended nature, which we have not tested at all, once we're underground here, we can start drilling much more efficiently at a much lower cost base. So it's our intent to get underground, understand our development rates, our pumping rates, ventilation, ground conditions, all of those key important things that you need to know before you make that construction decision. It also allows us to test out our mining contractor to see if they're going to be the ones that can be awarded the main mine contract. So we're hoping to get down here, take this sample. We'll do a little bit of bulk metallurgy, but really you can see here, it's to confirm the geotechnics, right? Confirm the metallurgical testing, or excuse me, the spatial orientation of these structures. But also, and this is arguably the most important, not so secret anymore because I go around telling everyone, but what we want to do is be underground, and by the time we receive those permits, we can just continue mining. So we've got a jump start here on actually being able to start your capitalized development and then just stockpile the mineralization. So taking a step back here, strategy-wise, we submitted our MIA application already. We're hoping to receive those, call it in Q1 of 2026. We'll be done and down under here. By the time we receive those permits, we can just keep mining the whole time that we're building the processing plant. Now, I've told everyone, second half of 2027 is when we hope to have initial production. That gives us, Q1 of 2026 all the way to second half of 2027 to be stockpiling. So we want to have 1 million tons stockpiled on surface before this mill ever gets turned on. That has the ability to really decouple the mine risk from the mill risk. And there's, an abundance of cautionary tales out there where a company didn't open up the mine enough, and then you've got a hungry mill that's just starved for material when you don't have it. And so, again, you can ask Simon too, where most projects fail is at this interface. So mitigating these growing pains that inherently exist is what we're focused on with this program. So I can't understate how valuable this particular program is.
And Mike, how quickly will you make a construction decision after the feasibility study? I mean, it's obviously a no-brainer. So, is this something that could come, right after?
Well, there's three key things that are happening this year, right? The first one is, of course, that feasibility and the bulk sample test mine, the results of which potentially feed into that are an important de-risker. But in addition to that, the other two key advancements on de-risking, one, of course, permits. Again, I just mentioned, submitted already, hope to receive those by Q1 of next year. But the third is your project financing, right? We started project financing discussions last February, which is pretty early for a North American group. But our rationale there was get the potential lenders as comfortable as possible with this risk profile. So we got them under CA. We handheld them all the way through delivery of the PEA and, of course, through FS. A few of these groups were on site just 2 weeks ago for their second and third rounds. Think here, call it 70-30 debt to equity split. Again, with the rapid payback, the high grade nature, pick your interest rate. It doesn't matter as much to us. What we're focused on is simple, plain vanilla here, right? So limiting the repayment penalties, limiting any hedging. So again, just focused on FX or a small gold component. No offtakes, no streams. We really just want simple, plain vanilla that we can pay back in a quick time frame. With the call it the courting that's been occurring since February of last year, we're in a very, very good way to already shortlist who those groups could be. We've got 9 term sheets in front of us right now, all North American and European banks that every single person on this call would know. So once we have the debt or the project financing package secured, again, 70-30 debt to equity is what we're looking at. And once we have the feasibility out, that's frankly, your bankable with your reserve delineation. And then, of course, waiting for those permits. That's when you can make a construction decision officially. I can tell you, you're right. Our board is already, drinking the Kool-Aid, so to speak. So we get that the technical aspects of this project is largely de-risked. We get that the access to capital here has largely been de-risked. It's really, frankly, the permitting that remains. And so waiting for those permits is the key. So we do run a dual track, though. Everything that we've talked about so far in this presentation is project 1. And again, that covers just a small corner of what we have. It's, again, 8% of the known 93 kilometers of mapped and sampled vein strike that we've got. So pushing forward to cash flow, yet again, priority for us, and it's all on de-risking. We're not growing the resource anymore because, frankly, we've got enough. It's get to cash flow. And then, based on those numbers, you can be spending $20-30 million a year to really turn the rest of your districts into Swiss cheese. But again, resources published, feasibility is next stop, and then, of course, silver production in the back end of 2027. This year, we're focused on those low unit cost methods. So district-wide EM and MAG studies. We've also got TerraSpec data, which is really just trying to identify where you have those heat sources. And this comes through alteration minerals like clay. So if you can look in your drill core and find clay, and you've got this instrument that allows you to do that, that can point to other places where you have an engine that's really driving the hydrothermal precipitation of gold and silver. So that's what Dr. Velador and of course, Dr. Magar are doing to find new areas where we could have another center of mass. And that's frankly what we're doing over here. We're drilling some of those areas that we've identified as being priority targets. So this is purely discovery-based drilling. We've got 2 rigs doing it. It's a 10,000-meter program. We're about 60% complete with that program. And again, this is initial program. So understanding your geometry and the dimensions of these structures is really what we're after today, to then do follow-up drilling to delineate a potential resource. That's all out in the eastern portion of the district. In addition to that, you do have targets for expansion. As I mentioned, the 11 structures, 12 structures, they're open in every direction here. So we can incrementally look to expand those once the FS mine plan is in place. But then in this orange ellipse, these we're calling proximal targets or near mine targets. And these are these targets that if you make a discovery, you're within haulage distance to that centralized processing facility. So it can potentially complement the FS mine plan in the future, whereas a discovery that you might make out here in the east, you're about, call it 10 kilometers away. It's just, again, those present values will be eroded to nothing. So this drilling is looking to identify a new center of mass, which could warrant its own standalone facility. But in addition to this contiguous package right here, as I mentioned, we tripled our land package. Down here, we've got San Enrique. This Fortuna held this ground, and when Jesus, our VPX, worked for Fortuna, he didn't want to let it go. He was extremely excited about it, but Fortuna switched their corporate strategy. They went into Africa. They bought a gold company, right? Rox Gold. So you can't always control, but now Jesus is very pleased to have this back. All of our primary structures, I'll try and just draw them on here. All of our primary structures trend right onto this ground, right? And we've got some preliminary geophysics to support that. If you just go back to this, maybe I have to do this. If you just go back to this map, you can really see these are those key structures, including the Copala structure, which trends down and on. Naturally, we're asked next, well, who owns this ground that's in between? The answer is we do. We can't put it on yet because these claims were canceled. And in Mexico, you need to bring those back from, call it, claim purgatory with your legal team. We're in the process of doing that. However, we have signed the exclusivity agreement with the local ejido. And again, that's incredibly important in Mexico. Lagara, though, this is where I put my geology hat on. It gets me incredibly excited. Lagara, similar to San Enrique, a past producer. This one's been in private hands since the 1940s. It's never had a single diamond drill hole poked into it. Now, knowing what we know about this district and all of the mineralization that exists around here, I mean, you really can't walk very far without finding a new mine at it or mineralization right on surface. So the way that we discovered Napoleon, I can see an exact replica of that up here at Lagara. So I'm extremely excited when we finally get going here, but make no mistakes, yet again, not today, not tomorrow. These will be really turned into Swiss cheese once we're into cash flow in 2028. You might see us do some small recon programs to maintain exploration momentum here on the file, but you won't see any true meaningful drill programs until we're into cash flow, Panuco, because really that's where the company and those shareholders see the re-rate. And that's what's really identified through this slide right here. I'm a real big PNAV multiple guy. And when you look at the silver space in particular, the silver producers fetch a PNAV multiple far and above any of the other commodities. The only, it's not a commodity, but the royalty and streamers, they typically trade at a higher multiple than the silver producers. But silver producers are typically trading, I know today it says 0.9, they're typically trading, up to 0.1, 0.2 on average, 1.1, 1.2. Since we started using this bar chart, when we published the PEA, we've seen them up as high as 1.4 times on average. So this is really just showing you it behooves a silver developer to get into production because of that just natural re-rate, given the scarcity of these quality silver primary assets. And so you're seeing a 132% increase from today's levels, and that's holding everything constant. That's holding commodity prices where they are. That's holding no new additional discoveries. Of course, no improvements to the current mine plan. This is what we would see. But we all know, of course, based on everything I've said, that that's not going to stay the same. Commodity prices appreciated. We're actively drilling for new discoveries, and we've increased our M&I resource by 43% to translate into an updated mine plan. Right? There's almost a slide that I needed to follow this that shows, yeah, that's great. You see this 132% increase from developer to producer, but how likely is Vizsla Silver to actually achieve that relative to the peer group? And I'd say, we're far superior. Another way to look at this, and I like this as well, is precedent transactions. Unfortunately, I had to remove two quality names from this. One was, of course, Silvercrest, which was acquired by Core. And the second was Gato Silver, which was another Mexican mining single asset company acquired by, First Majestic. When you looked at the PNAV multiples for those two assets at the time they are acquired, average is 1.85 times. If you were to apply that same multiple to our company today, we would be a $3.5 billion company. So that's the re-rate that we're looking for. That's why we're not going to sell it today or tomorrow to a producer that wants to take it on themselves. We want to realize that peak value and take this to a multi-billion-dollar company. So again, just to reiterate here, I know we're getting at the end of time and I want to leave some room for questions. Fast track to production, the cash to do it, of course, the team to do it. And when you talk about that previously disturbed nature of our district, it really does set us up for a positive decision on an underground silver project. So much land to continue exploring, and again, 160 plus drill ready targets covering only a small portion of our district yet that we know of today. We're still finding new workings. We're still mapping new structures right on surface. If this is anything like San Dimas, which we know it is, they'll be finding veins in this district when my kids are having kids. And again, timing, so important here. As you know, we have a run up in silver price. The world is starved for silver right now, really led by the photovoltaics industry. And we see a very catalyst rich 12 months particularly owing to those milestones of feasibility, project financing, and of course, the big one being the permitting that could really translate into a strong re-rate of Vizsla Silver. Lastly, I'll just show this development timeline because I think it's beneficial. I like to look at things visually. So when we look at a Gantt chart here, yet again, you can just see our strategy. We've ticked off all of these, submitted those permits. It's about 4 permits that are remaining to get a positive decision on. One, of course, the big one being the MIA. The second is the power. We know that there's grid capacity available to us. However, where is the substation? Where is the transfer station going to be located? We also need an explosives permit, which is frankly, it's a bit of a formality, but it's a long lead item, as you can imagine, in Mexico. We do have a current explosives permit for the test mine program that's been grandfathered. However, we'll need to apply for the broader project build. And then the last one is a simple rezoning. So basically taking your property from residential or agricultural and turning it into industrial. But again, given the brownfields nature, that's very simple process for us. And then, so look, you're here, you've submitted your feasibility, or you've published your feasibility. We've got that lag time in between. This is where your construction decision hopefully will be made. And then you're off to stockpiling until you get to back end of 2027 and that mill's turned on. So that's the overall development timeline here and how we plan to push this project forward. When we look at our company snapshot, again, we're in a really good way to do this. 288 million shares outstanding. Again, I guess volumes are a little bit down from last month here, but 2.2 million shares traded daily, 92 million cash in the bank, very well covered by the analyst community. What you've seen actually is a turnover from smaller boutique firms that covered us early days into more banks, right? And that's natural for a developer that is of quality that's likely to be built, right? 1 in 1,000 exploration plays becomes a mine. It looks like we've got all the hallmarks to become a mine here. And when you talk about project financing, especially debt component of that, you can start to imagine some of those groups that might be included. And of course, they start initiating coverage on you. So I'm happy to leave it here. I guess the last slide I like to show is this one. I mean, not always can you show that if you've ever invested money in a company, well, you've made money, but that's the case with Vizsla Silver. These are all of our financings that we've done since inception, and kind of the re-rates that have existed. I like to look at this because it does show, you obviously had initial discovery, boom, you've got that exuberance. Obviously, you've got some sellers there, but as you march towards maiden resource, which was published here, you've got that turnover. The speculators depart the file, and you've got those, call it early stage sophisticated institutions that come in. They can start plugging in these numbers into their models. And then we reached a real low point in Mexican mining, right? This is where you had speculation on claim time reduction, speculation on open pit mining bans, right? All of that was occurring. And then it started to turn. And then what you see here right at K, this was us being included into the GDXJ. So 9 million shares bought on market that one particular day. But I like to see this. This is the volume increase, right? This is showing that Mexico is a lot more favorable. You had a new president come in, and now things are just improving in the right direction. So proven access to capital, obviously the return on the investment, and when you're discovering an ounce of silver at just 41 cents per ounce, and spot prices at 32, you're in business is very, very good. So with that, I'm happy to open it up for questions. I know I always run long, but it looks like we've got 1 minute. Oh,
It's
no.
okay. No, we're okay. We have a question that someone's going to ask live. So George, I'm going to allow you to talk. So go ahead. You got to unmute your microphone. George, can you unmute and then you can ask your question? There you go.
Can you
Perfect.
give us an update on the royalty stock?
Yeah, absolutely. So Vizsla Royalties, that was of course spun out. That would have been last, call it summer, early fall, was spun out from Vizsla Silver. Those of you that had shares in silver, for every 3, you received, 1 share in Vizsla Royalties, as well as a common share purchase warrant. Vizsla Royalties is now up to about a 60 million market cap. I'm CEO of Vizsla Royalties, for context there as well. And frankly, it's a value creation tool. We push forward value that wouldn't have been realized until production otherwise. Now, the investment thesis for silver in royalties is essentially the same. What's good for the de-risking of the Panuco asset here should translate into a re-rate of the royalties, right? It holds a 2% NSR on this production that we're highlighting. But as a royalty gets closer to production, so following the financing, following the FS, and of course a positive decision on the permits, you will see a re-rate in the royalty file as well. Now, again, investment thesis is the same except for one major thing. Vizsla Silver is not for sale. Vizsla Royalties is very much for sale. We've always viewed Vizsla Royalties as optionality for Vizsla Silver to fund the equity portion or a portion of its debt for project financing, right? So Vizsla Silver holds 35% ownership in Vizsla Royalties. It can use that, again, it's a smaller number today, but it can use that, again, to tackle some of that equity component. It's also got its ATM in place, but really that's Vizsla Royalties. We've got about 7.5 million in cash. We're not actively going to bid for marketed royalties because frankly we won't win. We can't be competitive. It's a saturated space. If you do see us grow, it'll be privately within our district or within our network. And so if we do grow it, that's the way we would. But other than that, it's a very sleepy file that is less risk than silver. I often tell investors, if you're going to invest in Vizsla, 75% in silver, 25% in royalties. If I mean 92 million with no debt, I don't think it'll happen. But if Vizsla Silver were to go bankrupt tomorrow, Vizsla Royalties still holds a 2% NSR in Panuco in perpetuity. So if a Pan American comes by 10 years from now and buys it and develops it and starts producing 20, 30 million ounces a year, well, you as a royalty shareholder will have exposure.
Great, thank you. And George, we picked up some noise in the background, so I muted you. But if you have another question, either type it in or raise your hand again. So Mike, we're gonna go rapid fire. Maybe I missed it, but will any additional M&I ounces be in the feasibility study?
Well, yeah, absolutely. The new M&I. Let me see. I don't know if we've got the new one here. We usually have a full resource table. Yeah, here it is. Yeah, so the last, and this one's a bit noisy, but the last resource only had indicated we had 155 million ounces. That's what the PEA is based on, right? Now, you're sitting with 176 million ounces in indicated and 46 million ounces in measured, right? So 222 total million ounces. Another way to look at it is, of course, gold. You're about 2.7 million ounces of gold that's now going to inform the FS mine plan. And again, you cannot include your inferred mineralization when it comes to an FS. And so that's really the differentiator, hence why we were so focused on de-risking these classifications.
Okay, great. Let's see here. Have you let anyone into your data room? It seems like you've de-risked the project to a point where you should be acquired.
Yeah, we get this question a lot, and that's why I always start these meetings with that vision slide. We do not want to sell this project. In fact, we've gone to great lengths with our legal team to build legal moats around the company and the asset. We of course have had and have a data room that's quite active, but we run a static data room, so it's a point in time data room. We don't provide up-to-date information unless you're call it one of the lenders, right? The board of directors right now for silver is not prioritizing a sale. Therefore, we're not letting anybody new in. But as you can imagine, and to your point, when we published our second resource, we had 100 million ounces of silver alone, right? And when you have 100 million ounces of silver alone in your global resource, every corporate development team for every one of those majors that we've looked at, it's a mandate for them to come in. And so, yes, of course, virtually everyone has had a look.
Perfect. Thank you very much for that. Next question. So how is the new excuse me, how is the new administration in Mexico versus previous in terms of permitting? And then one other comment below was the new Mexican president is enjoying 86% approval.
Yeah, yeah, it's fantastic. We as a corporate, we don't typically align with any given political party or candidate. But so far, what we've seen is a much more practical, pragmatic approach to mining and the economy, frankly. We knew that the previous president of Mexico, AMLO, he really would get on a radio show every day and kind of spew negative mining rhetoric, and he stalled a lot of permits. Now, both Mag Silver and Silvercrest, they received their permits under the previous administration, right? So it's not like nothing was getting permitted. It's just there became quite a delay. Claudia, we've already seen a few permits this year, right? Alamos is one. Grupo Mexico, very large company. They also received permits on new projects. So we know that the wind is blowing in the right direction. We like everything that we're seeing, but of course, cautiously optimistic is the way we like to talk about things. If you ask our CEO what keeps him up at night, it's just the permits. That's the black box that exists in our space. Now, we've got some excellent consultants and advisors that we're working with that can help. And frankly, everything that we're hearing is about 12 months to receive a positive approval. Now, we do also know that there's some companies that are in the queue. Gold is one, Discovery Silver is another. And frankly, we're hearing that Gold could receive their permits as early as March. If that happens, I think we'll see a tidal wave of investment coming into the Mexican silver space.
Great. Are there any equipped neighbors available for sale?
Sorry, I don't know if I understand that question.
Equipped maybe meaning, already in production or anyone that's worth, taking a look at in terms to expand. Um,
Okay. Yeah, I get it. There's a couple smaller, not scalable ones that you might be able to tuck in some immediate cash flow. The problem that we have for Vizsla Silver on a corp dev capacity is anything that we look at, and again, on a cumulative net asset value perspective, nothing is going to compare or be equal to or greater than Panuco. It's just there's nothing else in the entire sector that compares. We struggle to find comps on this, especially in the developer space. You have to look at comps that are in production if you want to see what Panuco's like. So unfortunately, most things that we would do would be dilutive. Once we're into cash, that could be a different story because we want a development asset to backfill our pipeline. Frankly, I think we can find that organically within our land holdings. Look, instead of buying something in production to generate immediate cash, look for us to potentially add new to our district, right? Look for us to grow in this frontier belt that we've really identified because we have strong competitive advantage now in country.
Absolutely. You discussed how you'll finance the construction in terms of debt to equity. But one question that followed that was, do you think you'll need to do another raise before the feasibility study?
Before feasibility, no.
Okay.
We've sit with 92 million. There's really no need to raise capital today. As I mentioned, we do have an ATM, which is an at the market facility in place. It's $100 million US denominated ATM. We've been using it strategically. I want to say there's about 85 million remaining on it. And we don't drip this out on a daily basis, so the hedge funds can cover their shorts or anything like this. What we do is strategically to new institutional investors. One I can highlight is Jupiter out of London. They established their position. It was I want to say it was an $8 million US position they established through our ATM at a 320 share price. So exactly how you want to use that vehicle. We could use that vehicle if the share price is in favor to incrementally bring in more capital without being dilutive, on a bought deal discounted financing. So I think the best way to think about our financing needs, and again, we have 92 million. Let's say we end the year here with about 50 million US. We raise 200 in debt. You pay the project at 225. You're left with about 25 million. We'll need about 50, 60 million in equity to get us to cash flow, right? But again, this would be post FS. And looking at what the optionality we have is, we've got the 35% ownership in VROY. We've got the ATM with management insiders and directors holding, call it about 12% of the outstanding shares of the company. We're allergic to dilution just as much as those on the call.
Yeah, and I think it'll be very easy for you to raise that, no questions asked. So that's great stuff. We're going to leave it there. I want to thank Mike Pettingel for coming on and bringing everyone up to speed on the company. The company continues to hit every important milestone, a lot on tap for 2025 and beyond. And if you look at, in terms of you know, mining stocks with the potential, first pour in 2027. It's not too far away. So definitely, and the stock has sold off a little bit here recently. So it's, all the earmarks of a great opportunity here. Before I wrap it up, Mike, any parting words for our guests?
Yeah, this is when the re-rate exists, right? We're in the development stage now. We've got a pathway to get to production with milestones. I believe they're milestones and to a lesser extent catalysts. So you know that they're coming. We telegraph, what they could be. Again, under promise, over deliver. But this is the time that you really do see that re-rate. And frankly, it's a compelling number.
Yeah, it sure is. In the meantime, you can get additional information on Vizsla Silver at the company's website, vizslasilvercorp.ca, including details on the company's current projects as well as latest press releases.